Yes. Hello, hi everyone, and welcome to the CA Final Indirect Taxes Custom. Are you all? Everything going great? Just give me a confirmation. Your IDT paper for May 2024 consists of 80 marks of GST and 20 marks of customs plus FTP. So we understand that whatever we are going to study in today's session is already. FTP I'm not covering in this video because FTP revision I have already uploaded on YouTube. So the only portion that we are covering is the customs part. Now out of 20, we know one 5 marks question from valuation is always asked. One 5 marks questions either from assessment or baggage we expect, and remaining 10 marks. Now out of this 10, again 30% are MCQs. So 20 into 30%, we understand almost 6 marks will be from MCQ, which means 1 or 2 MCQ would be from FTP. So like 2 to 3 marks we can expect from FTP. Remaining 3 or 4 marks, and plus here the 4 marks is the other descriptive portion. So you studying customs, that rather than giving too much time on theory, which is again also important, because November on theory of customs, and they also ask theory of customs. So I'm not saying it cannot be asked, it can be asked, but like out of 20, it will be very easy for you to score 14 or 15 marks because you know the areas from where questions are being asked. Now every other thing, 100 pages, out of which 320 approx is GST. So 80 pages you have to read for customs, and plus you have to solve questions, and it is nation. So you will have the questions. Chalo. Yes, done. So we will be smart enough in today's marathon to cover things which will help you score approximately 16 marks out of this 20, because 2 or 3 marks would be FTP, 1 or 2 marks I don't know from where some small theory or something could be asked. We will try to cover things so that 15 or 16 out of 20 is very much easy for you to score. The areas which going by trend are normally covered. With first portion, which is levy off and exemption from custom duty. Yes, I will not be covering uploaded on YouTube. Makes no sense to cover it again, no amendments also. So other than FTP, entire customs we will cover. So stand by the word levy. Levy would be when do we actually charge customs, levy customs. So the point of charge of customs would be when you import goods or when you export goods. Now most important word here is goods. On services, on import or export of services, customs duty is not levied. So it is just goods. It is just goods that you import or export. Customs duties are levied. So if we go to section 12 of the Customs Act, the charging section simply says that custom duties are levied on goods. Only and only goods. Which goods? That are imported into or exported from India. Now tell me on what rate custom duty is levied. So simply, whatever rate is prescribed in the customs tariff. Now according to HSN code, all goods are classified, and the Customs Tariff Act 1975 provides us the rate of import duty for all the goods that you import or export. So all the rates that are specified in Customs Tariff Act, based on that we levy customs duty on or export of goods. And even if government is importing, exporting something, the same to same provisions apply on government goods also. So in the Customs Tariff Act 1975, we have two schedules. First schedule, second schedule. So in first schedule, the rate applicable for import of goods is given, and in the second schedule, the rate applicable on export of goods is given. Right. So it is not the same rate that is applicable on import or export of goods. When you import goods, you will check the first schedule of Customs Tariff Act. When you export goods, you will check the second schedule of the Customs Tariff Act. Right. This is about the charging section. Now, Customs Act 1962, we understand it extends to whole of India. Of course, there's no exception. Jammu, Kashmir, everything. The Customs Act applies everywhere in India and plus even outside India. Even outside India, if we feel there is some offense being committed, Indian goods are related, then also Customs Act can come into picture. So it extends to whole of India and also outside India. Also outside India, if any offense or contravention is committed. Who has the power to levy customs duties? So the power to levy customs duties, of course, with the central government. We understand the list 1, list 2, list 3 that we've studied in GST also. The union list, state list and concurrent list. So Customs Act, customs duty is specifically mentioned in the union list, which means only and only central government, no state government, only and only central government has the power to fully levy customs duties. Right. What does the customs law consist of? Customs Act, Customs Tariff Act. Customs Act simply gives to import, export procedure, etc. On what rates to levy custom duty? We understand Customs Tariff Act. And of course, we have corresponding rules and regulations to the section which are issued by central government and CBIC respectively. Alright. What is a taxable event under customs? What is a taxable event under customs? So understand. Today, if I am importing something, tell me what are the two options available with me to clear the goods when I am importing goods. What are the two options available with me to clear the goods when I am importing the goods? Option number 1, let's say this is India and here my vessel has arrived. I can straight away unload my goods, clear my goods and take them for home consumption. So when the goods are reaching India, I am paying import duties and I am clearing the goods for home consumption. This is the direct clearance for home consumption. Whereas the second option available with me is when the goods are coming here, at this point of time, I am not interested to pay the duties or I am not having resources to pay the duties. What I can simply do is, without payment of taxes, without payment of any custom duty, I can simply deposit these goods into customs bonded warehouse. I can deposit these goods into customs bonded warehouse and then by filing into bond bill of entry. And later on, whenever I want to clear the goods, I will file X bond bill of entries and at this point of time, I will pay the duties and I will clear them for home consumption. So under both the cases, what will be the taxable event? Because we understand, like in GST, supply is a taxable event. In Income Tax Act, income is a taxable event. So when you do supply, GST will be levied. So when you import or when you export, custom duty will be levied. So what will be that exact point? What will be that exact event when I will say that taxable event has happened and now duties are supposed to be levied? So in case of direct clearance for home consumption, we say that, let's say this is territory of India, this is territorial waters of India. Now, as soon as the vessel enters the territorial waters of India, I will say my importation has started, because territorial waters of India is also considered as India. So as soon as my vessel reaches the territorial waters of India, it enters the territorial waters of India, I will say my importation has started. Now my importation will continue till the vessel actually reaches the port and I am filing my bill of entry for home consumption and paying all the taxes. There I will say that my import procedure has finished or my taxable event has finished. So when we clear the goods directly for home consumption, as soon as my goods enter territorial waters, my importation will start. But my taxable event as such will occur when my goods reach customs barriers and I file the bill of entry for home consumption. Talking about warehoused goods simply says, in one word I can tell, when we file the X bond bill of entry, which means from the warehouse when we are clearing the goods and from the warehouse when we are taking the goods out. For home consumption, and then these goods become a part of mass of the land country and no more a part of the warehoused goods. So customs barriers would be crossed when goods sought to be taken out of customs. Simply in one word I will say that filing of X bond bill of entry will be considered as my taxable event when I am warehousing my goods in case of imports. Talking about exports, it is very much simple. See, this is India, territorial waters of India is also India. Now we have two case laws also related to this. Now here my vessel has left the customs port. My vessel has left the customs port, and let's say it has not yet crossed the territorial waters of India. Before crossing territorial waters of India only, my vessel sank. Tell me, will this be considered as export? Two. Question number two, when my goods have left the port of exportation and it has crossed territorial waters of India. The vessel was here. Meanwhile, we found out that there was some issue with the vessel and we cannot go further, and the vessel came back to India. Will this be as export? Tell me. Question number one. Question number one, very simple. See, understand, the taxable event only says one line. As soon as the goods cross territorial waters of India, as soon as the goods cross territorial waters of India, we will say export has happened. So in case number one, if my vessel left the port but has sank in territorial waters of India only, export has not taken place because the vessel has not crossed territorial waters of India. Whereas in case number two, the vessel has once crossed territorial waters. Now even if it is coming back, crossing of territorial waters of India will signify that taxable event has happened. So export will simply say that when my goods are crossing territorial waters of India, my taxable event of export has occurred. Now, all this thing anyways we'll cover in the chapter of warehousing, but just to give you an overview or just to give you an idea, how will government ensure the safety of its revenue when you are depositing goods into warehouse? Because we are saying today, if your goods are coming here, you can simply put them into warehouse without paying any taxes. So how will government ensure that you will later on pay the revenue? Simply by making you file into bond bill of entry. They will ask you for a bond amount thrice of the duty assessed, and they will also ask some security from you. So importer will have to execute a bond binding himself to pay the sum equal to thrice of the amount at the time of importation. So this is how government will ensure the revenue. Done. Now, before understanding re-importation, it is very much important for us to first understand what is importation. If you understand importation, you will easily understand re-importation. So we will pause this chapter here only for once and move on to the next chapter, which is import and export procedure. Again, not important for examination. Import-export procedure is something that you should just read or listen to. Keep in mind for MCQ purpose, because very rare chances that theory from import or export procedure is being asked. So just that you don't leave it, I will give you an entire overview. You just have to listen everything and keep things in your mind. No need to learn the exact language here. No need to learn the section numbers. No, you should just know the procedure, that this is how goods are actually imported into India. Then we go to re-importation. Okay, so talking about importation, you can imagine any port. Imagine any customs port where goods are coming. So see, first thing that they are saying is arrival of vessel or aircraft in India. If you are coming, please do come only and only at the customs port. It is like you cannot bring your aircraft to any normal airport. You cannot bring your vessel to any port in India. If you are coming to India, you are allowed to come to land only and only at the customs airport or port. See, however, CBIC has all the powers. Central Board of Indirect Taxes and Customs has all the powers. CBIC can allow you to come and land at any other port or airport. Ma'am, what if I am coming at some other port or airport? What if I am not complying with this section 29? Simply we will assume, see, if you are bringing the goods legally by paying duties, why will you not come at customs port? So basically, if you are trying to come at some other port, it simply means you are trying to illegally bring those goods into India. So if you contravene this provision that you should come only and only at the customs port or airport, if you are contravening this provision, we will simply presume as if the person in charge is trying to illegally bring the goods into India. Right. However, let's say there was some technical issue with the aircraft, or a person on my aircraft, a crew member on my aircraft is having a heart attack. Of course, I cannot tell him that, wait, we will first find customs port and go at the customs port only. Of course, we cannot do that. So there are obviously exceptional circumstances, let's say due to distress of weather or health condition or any other reason, if there is some emergency. Simply if there is some emergency, then of course you can come at some other port or airport also. But in such situations, there will be three obligations of the person in charge. First, as soon as you arrive at some other port, to report your arrival to the nearest customs officer. So you will find out that, okay, if I have come to some another port, which is the nearest customs port airport, if unable to find which is the nearest police station, you will first of all inform that due to these weather stress or this emergency, we had to come at some other port or airport. And if they are demanding logbook from you, they are demanding records from you that who are the people on the aircraft or vessel, what goods are there, you will also provide them with the logbook. Second, you will not allow the goods or people to leave the vicinity of the aircraft or vessel. So let's say the reason for my landing was that one of my crew members was having heart attack, so I had to immediately in emergency land at some other airport, which simply means there is no need to unload the goods from the aircraft. Simply we'll offboard that person and then take our aircraft back at the prescribed place. So no need for the goods or other passengers to leave the vicinity of the aircraft or vessel. Everyone and all the goods will stay in vessel and aircraft only. But of course, let's say my aircraft caught fire and there's a risk of life, there's a risk of damage of property, then to of course pick up your baggages and run. So we are saying not to allow the goods to unload or passengers to leave the vicinity of aircraft or vessel unless it is for the reason of health or safety or preservance of life or property. And last obligation is, as soon as you come, you report your arrival to the nearest officer. Now you have to comply, you have to follow with all the directions that that officer is giving to you with respect to any goods. So first of all, section 29 simply says, if you want to come, please do come at the customs port or airport only. If you are trying to come at some other place, we will presume as if you are trying to illegally bring your goods into India. However, we understand there can be cases of emergency. In such situations, you can come at some other port or airport also. But if you do so, there will be three obligations on you. First, to inform the nearest officer. Second, to not allow the goods or passengers to leave the vicinity. And third, to comply with all the directions that the officer is giving to you. Alright. Now, before coming, you will inform the customs authority that what goods you are bringing. So we talk about delivery of arrival manifest, import report. Basically, they are all same only. So a detailed report about goods that have been brought to the port or airport for unloading, you have to provide. Means when you come through land route, let's say you are importing goods from Nepal, Bhutan, which are landlocked countries with India. In such cases, the report that you file is known as import report. Otherwise, we call it as import general manifest or import manifest or arrival manifest. Now, what is the time limit? For me, for a person in charge to inform the customs authority that we are bringing these goods. So we are saying that if you come via vessel or aircraft, in that case, prior to your arrival, electronically only you have to inform so that the customs authority is ready. We already know prior to your arrival that this vessel is coming and this vessel is containing these particular. But if you are coming via land route in a vehicle, in that case, upon arrival within 12 hours, there only manually you can file this manually or any prescribed manner that is being prescribed there at the customs station. You can file the import report. So in case of aircraft vessel, you have to file everything prior to arrival electronically only, and in case of land vehicle, upon your arrival within 12 hours, you can file in a prescribed manner. What if, ma'am, I am not complying with this time limit? What if I've already arrived and I'm yet to file my import general manifest? Then what to do? Is belated filing allowed? Yes. If you can give some justified grounds, there was some issue, let's say internet, government has banned internet only, there can be some very much genuine reason. If you are able to explain your valid justified grounds, it is okay, belated filing will be allowed. And of course, it will not be for free, so there will be a penalty also for delay. Ma'am, what if once I have filed my import general manifest and then I want to amend it? Mistakenly, I had provided incorrect description of the goods. Then see, if you can satisfy the proper officer, that whatever information is incorrect or incomplete, there was no fraud. It was mistakenly we provided some incorrect information and now we want to amend it. If you can satisfy officer, then yes, very much normally, amendment to the import general manifest will be allowed. Let's say 1990 goods to India. 1990 quantity of goods to India. Mistakenly, while filing import general manifest, I wrote 1099. Now I want to amend it. If I can satisfy the proper officer that yes, my intention was not to save duties on the differential portion, it was genuine error, genuine mistake. Officer is satisfied, he will let me amend. Now we will not think that whatever is the difference here, I am belatedly filing arrival manifest for that and chalo, now we will levy penalty on this. It is not the case. So they are simply saying that amendment does not equate to delay. So just that for amendment you cannot say that 1990 minus 1099 for these amount of goods I have delayedly I have late filed my import manifest, so chalo let us levy penalty. No, this is not the case. You can do amendment in good faith and it is all acceptable, it is all okay. What is the importance or what is the significance of this import general manifest? So only the goods that you mention in this arrival manifest, import manifest or import report, only those goods will be allowed to be unloaded at the customs port or airport. So only goods that are mentioned in these reports or in this manifest will be allowed to be unloaded. Now, just like you inform about the goods, you also have to inform about the crew members and the passengers. So, TA, so in charge or any other proper person will inform the officer that who are the passenger and crew who are coming. Time limit is again same in case of aircraft and vessel before arrival and in case of land or vehicle route upon arrival. So you will simply give the PNR, passenger name record information for each journey, that who are the people, passenger or crew member coming along with the goods in the aircraft or vessel. Again, the penalty for delayed filing is same with 1000. Now, imported goods to be unloaded only and only after entry inwards is granted. Now, this thing is very important here. Shout out with me that entry inwards applicable only and only for vessel. In case of aircraft or vehicle, there is no need to file any entry inwards. Entry inwards provisions are applicable only for vessel only. Specifically, I've written aircraft vehicle and I've striked off aircraft vehicle, which simply means only and only. You can write in big words here, only and only for vessel the provisions of entry inwards are applicable. What is the significance of entry inwards? It simply means that the customs authority is ready for you to come and unload your goods. So this is an acknowledgement. As soon as the proper officer gives you entry inwards, it simply means that it is an acknowledgement that come, we are ready to supervise your unloading of goods and to assess duty. Ma'am, when will we ask for the when will we make application for entry inwards? Very much simple. Whenever you are submitting your import manifest, your import general manifest, arrival manifest, along with that only, you will also apply for entry inwards in case of vessel to the proper officer. Until you get entry inwards, you are not allowed to bring your ship at the dock and start unloading your goods. So the goods on vessel shall not be unloaded until proper officer grants you entry inwards. See, of times we have limited capacity on the port. Let's say this is the port and here are the docks or berths. So only at 20 or 30 or 40 vessels come. Now if more vessels have come, of course we don't have place only to let the vessel harbor, to let the vessel come and dock in the berth. So in that case, what the officer will do, the vessel will wait here only outside the port and officer will not give entry inwards. Now when officer knows that yes, we have space, we have officer who can now supervise the unloading, after that only entry inwards will be granted to this vessel and the vessel can come and dock in the berth. So entry inwards will not be given if there is no berth for the ship to dock or the customs supervision is not possible at that point of time. Now this section is not applicable for unloading of baggage accompanying passengers. We have separate rule for baggage, we have separate rule for mail bags, and of course if there are some animals or perishable or hazardous goods in the vessel, we cannot tell them to wait. It could create some adverse situations also. So for animals, perishable goods or hazardous goods, these provisions of entry inwards are not applicable. Of If the officer has granted you permission, the officer has given you entry in which that okay, come and unload your goods, it doesn't mean entire port belongs to you, entire port belongs to your family. No, only and only at the approved places and only under the supervision of proper officer you are allowed to load and unload your goods. So they will give you a proper approved place, that this is the place where you can unload your goods, and of course unloading and loading everything is done under the supervision of proper officer only. However, board means Central Board of Indirect Taxes and Customs. CBIC can sometimes give some general permissions, or proper officer can also give some specific permission in specific cases, that okay, this is a very much regular importer who imports every day, it is okay, we trust, we don't want to supervise, that is okay. So officer in some special cases or CBIC in some general cases can allow loading unloading even without supervision of proper officer, right? Now there can be a case where, let's say, this big vessel has come. We call it as mother vessel. We call it as mother vessel. So a mother vessel has come. Now there can be two possibilities. Either there are some hazardous goods in this vessel and we don't want the vessel to come near our port. It might explode. Or there can be a possibility where this mother vessel is such big in size that the berth that we have here port is not sufficient enough to fit this mother vessel. Two situations where either the ship cannot be berthed because of size, or let's say there are some hazardous goods in the vessel. What we do is we tell the vessel to stay away from the port, and we can use these small boats. We can use these small boats to load goods from here to here or to unload goods from here to here. So simply section 35 is saying that you will not waterborne your goods. You will not put your goods in these small boats until and unless your goods are accompanied with a boat note. So they are saying that if the mother vessel is big or it is containing some hazardous goods, in such case loading and unloading can be done using vessels or boat, but the condition simply says that you will not waterborne your goods unless your goods are accompanied with a boat note. The boat note will be prepared according to the boat note regulations 1976. Again, sometimes the CBIC can give general permission or proper officer can give special permission, that okay, even without boat note you can waterborne your goods. Normally, there is no loading unloading done on Sundays or public holidays or after working hours. But of course, if you want to do so, you can do so by paying merchant overtime fees. So the proper officer may. The proper officer, okay, so no loading or unloading on Sunday, other holidays or after working hours unless you give a notice and you pay the prescribed fees. Also, let's say your conveyance is your vessel is here on the port. If the officer wants to board your vessel, wants to check what are the goods inside the vessel, he can do so. So the proper officer may board and remain on conveyance carrying imported exported goods for whatever period he thinks necessary, for whatever. Let's say he says, I half an hour, 1 hour, 2 hours, he want to go on the vessel, he want to check everything. He can do so, he is allowed to do. Proper officer may require the person in charge. Of course, the proper officer, if boarding the vessel, can ask for some documents, can ask for some explanations from the person in charge, and the person in charge will be duty bound to provide such documents and explanations. Now, restriction on custody and removal of imported. Now, until your goods have reached India, but until you properly clear your goods or warehouse your goods or you transship them for export to some another country, means you are yet to deal with your goods. What you can do, if you have imported some goods today, either you clear them directly for home consumption today, or you can put them into warehouse, or you can straight away transship, export these goods to some another country from there only. So whatever you want to do with your goods, by the time you are not doing something, by the time your goods are not cleared, entire procedure is not done, your goods will remain in the custody of custodian. Your goods will remain in the custody of custodian, and it will be the responsibility of custodian to look after your goods. The responsibility of custodian as such commences as soon as your vessel reaches the port and unloading starts. From there only, the moment the ship is berthed in the harbor and the goods are unloaded, the responsibility of custodian will start from there only, and by the time you finally clear your goods, the responsibility of custodian will continue. Who are the custodians? At major ports, the Port Trust, Inland Container Depots, Container Corporation of India, Air Cargo, Airport Authority of India, Rail Station Master. So these are the custodians in general cases. What is the responsibility? to maintain proper accounts of whatever goods are received, whatever goods are cleared, permit a removal or allow the goods to be dealt otherwise. So whatever is written in the order, only that ways the custodian will allow you to deal with the goods. If the goods are in custody of custodian and you have not paid taxes, you have not paid duties, you don't have the order to clear the goods, the custodian will not allow you only to deal with the goods. The custodian is required to tally the particulars of landed goods in the tender report. So what the custodian will do, when you are unloading the goods and the goods are unloaded, they are in the custody of custodian. The custodian will make a statement known as outturned statement. The custodian will make an outturned statement that these are the particulars of goods that are actually being received. And now you had prior filed import general manifest, right, before your goods came into India. Now this outturned statement and your import general manifest will be tallied so that we are sure only those goods are unloaded that were mentioned in the import general manifest, and after this your assessment can be done. So the authorities will then cross-check this outturned statement with the import manifest that you had filed earlier. Now liability. See, understand, you can simply draw this simple table here. All the custodians require an approval. All the custodians require an approval under section 45 to be called as custodians. Port trust. Port trust at the major ports do not require any approval under section 45. So they are basically acting as bailee only. So the port trust basically acts as bailee of your goods, where you are bailer and you have given your goods to port trust to look after for some time. This is how we deal with it. So for port trust and for other custodians, for port trust and for other custodians, let's say your goods are pilfered. Your goods are pilfered while they were in the custody of custodian. In such case, the liability of port trust will be towards you. Means you can go and ask for the value of your goods from the port trust. You can go to port trust and tell them that my goods were worth 10,000. You have to pay me 10,000 because you were acting as a bailee. So it becomes your responsibility to look after my goods. However, since they have not taken any approval under section 45 from government cannot ask duty from customs port. So understand, from port trust. So port trust acts as bailee. It is liable for value of goods to importer. It is not liable for duty on the pilfered goods. However, other custodians who have taken approval under section 45, they are liable for duty to the government, but they are not liable for value to the importer. You can simply remember this for MCQ purpose. Nothing very great, nothing very important. If you don't want to read 4 lines at the last day of examination, you can simply draw this table. Port trust, value liable, duty not liable. Other custodians, value not liable and duty liable. Right. Everything till here in 1 minute. Everything till here in 1 minute. Everyone here with me. If you are coming to India, please do come. If you are coming to India with imported goods, please do come at approved customs port or airport only. If you come at some other place, we will assume as if you are trying to illegally bring your goods into India. However, in case of emergency, you can come at some other port or airport also, where you will have 3 obligations: to inform nearest officer, to not allow people and goods to leave the vicinity, and to comply with all the directions that the officer is giving to you. Particularly, only and only in case of vessel, you will also have to take entry inwards. Before coming, you will give arrival manifest also, and also all the PNR information for passengers who are coming along with you. In case of vessel or aircraft, you will file it electronically prior to coming, and in case of land vehicle, upon arrival in prescribed manner within 12 hours, you will have to file it. Now, once you get permission, doesn't mean entire port belong to you. So you can unload and load your goods only at approved places, and that too under the supervision of proper officer only. If your vessel is big or contains hazardous goods, you can use small boats to load or unload your goods from port to vessel or vessel to port. However, in such situations, you will not waterborne your goods unless they are accompanied with a boat note. Chalo. Until you clear the goods, your goods will be in the custody of custodian, where port trust is liable for value, not duty, and other custodians are liable for duty and not value. Everything that we studied till now in 1 minute. Done. Now we come to filing of import bill of entry. Very much important, because of course along with bill of entry, you pay your taxes, and later on this document only becomes your assessment document. So section 46, filing bill of entry. This is not required for if your goods are intended for transit, transshipment. We study separate provisions for transit and transshipment where you are not required to pay duties only. Okay, so what the importer will do? The importer will simply make an application electronically. The importer will make an application electronically on the customs automated system. You don't have to go manually anywhere. You can file your bill of entry electronically, of course, we know. For clearance of good. 2. The proper officer. Under the Indian Customs Single Window Project. Now understand, this also contains a provision with respect to integrated declaration. You will file your import bill of entry, right? Let's say I have imported some kind of goods where I require approval from some other government departments also. So I wanted to manufacture some kind of a machinery which include some things which are also used in manufacturing of bomb, let's say. So government will not straight away allow importation of such kind of things. They might be restricted, prohibited, or for such kind of goods, I require approval from some other government departments also. So earlier what used to happen, you are first filing your bill of entry at the customs authority, then you also have to go to multiple government departments and seek multiple certifications and approvals. Now government has come up with a single window project where you can give an integrated declaration. So whatever goods you are importing, and you need some kind of approvals from multiple government authorities or departments, you can declare everything here only. You can straight away declare everything here only, and the customs system will forward your applications to the respective authorities and get the permissions for you. So we are saying under the Indian Customs Single Window Project, there's a common seamlessly integrated information technology system which is utilized by all regulatory authorities. So from any regulatory agency, logistics, service provider, importer, export, it connects all of you. So the customs broker or importer shall submit one integrated declaration which will be a single entry point, and everything is done electronically on the portal of IceGate. Just like we have GST portal for GST, we have IceGate portal for customs. So we have this e-Sanchit for paperless transactions. So instead of submitting physical papers and physical documents, you can just scan and provide everything electronically to the proper officer on www.icegate.gst.gov.in. Bill of entry is a document of assessment, and when assessed, this only becomes the assessment order. Simply, you always self-assess your taxes under GST also and under customs also. So I will self-assess my tax, and in bill of entry, I will declare that this is the tax that I have self-assessed, that I feel I am required to pay, and you pay it along with that. Now, once your bill of entry is assessed by the officer, this only becomes your assessment order. What are the types of bill of entry? We have form 1, form 2, form 3. Again, not at all. See, whatever we are studying, it is just for MCQ purpose, or like remote possibility some theory is asked. Otherwise, all this is not A or B category. This is C category. However, since we are covering everything, I am not skipping things. So white form, yellow form, and green form. If you straight away clear your goods for home consumption, means there is peace in your life. Peace means white. You don't want to file into bond, then ex bond, provide security, etc. You don't want to do anything. You want peace in life. You want peace in life, so you will straight away clear your goods for home consumption only by filing bill of entry, which means you want peace, and peace means white. So you will use white bill of entry. Now, if you are depositing your goods into warehouse by filing into bond bill of entry, so remember traffic signal, yellow, red, yellow, green. Yellow means pause, wait, means wait for clearance, wait until clearance, because we are filing into bond bill of entry. We are not clearing the goods now, we are putting the goods into warehouse. So the into bond bill of entry is yellow in color. And then finally, by filing ex bond bill of entry, you are finally clearing your goods, which means go, and go means green. So do we remember form 1, form 2, form 3? Once with me everyone. Once with me everyone, here in the comment section, tell me, if I clear the goods directly for home consumption, there is peace in my life, which means I will file white bond bill of entry. If I deposit the goods into warehouse, I am telling them to wait means yellow. And then finally, by filing ex bond bill of entry, I am saying okay, go means green bill of entry is what you will file. Chal. Declare what all information or description or details will be there in your bill of entry. Simply what are the particulars of packages, what goods you are bringing, everything properly according to the customs tariff act you will declare, so that it will be easier to classify your goods into particular HSN code and then find out the rate of import duty applicable on your goods. The importer shall ensure that whatever information, document you are providing, they are all accurate, authentic, complete, correct, valid. Means you are not mistakenly or incorrectly showing some incorrect particulars. So whatever information, document you are providing, they should be complete, accurate and valid. And also make sure that if certain goods are restricted or prohibited, you are not importing those goods. So you have to make sure you are complying with all the rules, regulations and all the laws while importing or exporting your goods. Let's say the importer is unable to furnish details. Means my goods have come and I am not able to properly assess it. I need some assistance from the proper officer. So I can request the officer that please come with me, see my goods once and help me decide that should I take 001 HSN code or should I take 002 HSN code. So I can ask the officer to come along with me and help me ascertain some necessary details if needed. Or also, let's say there is this one or two document or paper that is missing. Means I cannot complete my entire import procedure without that document. It is just a matter of, let's say, 1 to 5, 6 days. I will get the document and then I'll clear my goods. So meanwhile, what you can do is you can put your goods into warehouse. Now this is known as warehousing without warehousing. Why I will do this? See, there is very limited space on the customs port, and Indian customs port are so much busy. There is continuous import, export going on. And if you occupy space here, your goods are lying here, of course the customs authority is going to levy high dock charges from you. The dock charges, the demurrage charges are extremely high. So of course, letting your goods stay on customs port will incur heavy dock charges from you. So what we can request the proper officer is that I don't want to actually deposit my goods into warehouse. I want to pay the taxes and duties now only. I want to straight away clear my goods for home consumption. But some document or some information is missing. So just for some period of time, let me please keep my goods into warehouse so that I can save on my dock charges. Officer can allow you to put your goods into warehouse for some period of time, and this thing is known as warehousing without warehousing. This is known as warehousing without warehousing, which simply means you are putting your goods into warehouse, but the warehousing provisions are not being made applicable. So alternatively, he can seek permission to deposit the goods in a public bonded warehouse pending receipt of necessary information and supporting documents. And this is known as without warehousing, where you can keep your goods into warehouse but no need to file that into bond bill of entry, no need to give any security. Means no provisions of warehousing will apply on you. What is the time limit to file bill of entry? See, simple, you see this diagram and it will be extremely clear to you. So the day on which your vessel is expected to arrive, 1 day prior to that, you have to file your bill of entry. So if I am expecting that my date of arrival of vessel is 20 December, latest by 19 December evening, I have to file my bill of entry. In some exceptional circumstances, if I request the officer can allow me delayed bill of entry. How much delay? Delay could be maximum the day on which your vessel is coming. So simply we are saying that normally before end of the day, even including holidays, let's say your vessel is coming on Monday, you cannot give this excuse that 1 day prior was Sunday. Hey, who is stopping you? You have to do everything electronically only. Go to IceGate portal on Sunday also and file your bill of entry. So including holidays, we are not talking about working days. We are simply saying that the day on which your aircraft, vessel or vehicle is expected to arrive at the custom station, before 1 day before end of the day, you have to file your bill of entry. However, board in some special cases can allow you delay also. Delay would be how much maximum? Delay would be maximum the day on which your vessel is arriving. And this is maximum time limit. What if, ma'am, I am filing my bill of entry 5 days prior? Who is stopping you? File. So you can go till 30 days prior. So let's say my vessel is expected to come on a particular date. Even before 30 days maximum, I can file my bill of entry. So normally last date would be 1 day prior to the arrival of your vessel. However, you can file it anytime. You can file it anytime before 30 days of expected arrival also. Alright. This was all about This was all about filing of your bill of entry. Now, once you file bill of entry, officer assesses it and this only becomes your assessment order. So, importer or exporter shall self-assess the duty. We all know this, that we self-assess the duty based on our own understanding, classification and all the rules applicable. We self-assess the duty, declare it into bill of entry and pay the applicable taxes. Now, proper officer can verify all this. So, proper officer may verify bill of entry, self-assessment, and for this purpose, if he wants to physically verify your goods also, he can do everything. Everything is allowed to him. Selection of cases, basically, it is not that every bill of entry or every self-assessed tax is being verified by officer. Officer can verify when he feels so. So the selection of cases are primarily based on risk evaluation, that for what particular cases we want to do a proper full assessment or we want to do a reassessment. So proper officer may require some additional documents or information to properly ascertain the duty. There are some major importers who import on daily basis, to whom government allows that, okay, for you we will not do physical verification. So for some major importers, government is openly giving green channel, which simply means that routine examination is not done for them. It is just a tick that they will give. They will give of the details, that these are the details, these are the goods. Officer will just overview, tick, and then only marks and numbers are checked. However, if there is any specific doubt, then it's a separate case. While checking marks and numbers, officer feels that no, I doubt this information, he is very well open to go and physically verify and see the goods. Otherwise, normally, no physical verification or no routine examination is done for these major importers, so that they can save time, and by using green channels, simply by checking numbers and marks, their goods are cleared for home consumption. Right. If officer at any time feels that you have not properly assessed your duty, proper officer can obviously reassess your duty. And speaking order has to be passed for reassessment. What do we understand by the term speaking order? That if you are saying that 15,000 duty is required to be paid, but if officer is saying that no, 18,000, he will have to give reason. Speaking order means he will have to give reason why additional 3,000. That is known as speaking order. So the day on which officer is doing reassessment, within 15 days from there, he will have to issue you a speaking order. Right. Just like we study provisional, this is not provision, this is provisional. This is spelling mistake, provisional. So provisional assessment of duty, just like we understand in GST, provisional assessment of duty can also be done in customs. This theory can be asked in examination for 4 marks. What are the cases or what are the situations where you can go for provisional assessment? So provisional assessment can be done in what circumstances? Straight away, theory question can be asked. So out of all the theory that we are studying since beginning of the session, this becomes slightly relevant for you. So cases where provisional assessment can be done. First, where importer exporter is unable to make self-assessment, very much simple. I have imported goods and I am only not able to do my self-assessment. I will have to request officer only to do. So by that time, we will for once provisionally assess, and then later on officer will see everything and give me the final assessment order. So where importer or exporter is unable to make self-assessment, he will request proper officer only, that for once you do my provisional assessment, I will pay the duty, I will furnish security, and then finally you tell me the final order. Or let's say where proper officer thinks necessary that I want to do some kind of a chemical test or other test on your goods. I have imported, let's say, some kind of a liquid. Now I am saying this is a chemical. Whereas officer feels that no, this is not chemical, this is alcohol, let's say. You're just, because the rates are high on alcohol, you are giving it a name of industrial chemical. So officer can, of course, give your liquid for some kind of a chemical test or any other test. So if officer feels that he wants to do some kind of a test on your goods, so for that period of time, he can for once provisionally assess, get your goods tested, and then later on give you final assessment. Or let's say you as a person in charge have provided all the necessary documents. You as an assessee have provided all the necessary documents, but officer feels that no, he wants to still make further inquiry. He can do so. Or where you have not produced proper documents. So in that case, so obviously proper officer will be doing your provisional assessment only. So we simply remember the 4 points. I am unable to make self-assessment. Officer wants to do some kind of a chemical test. I have provided documents. Officer is not accepting. Or let's say I have not provided only. Then of course, provisional assessment will be done. So in all of these above cases, your duties can be provisionally assessed. Simply what you have to do is, whatever you are paying provisionally, see the difference from what may be finally assessed. So the officer thinks that finally this duty might go up to 25,000. However, you provisionally today are paying only 18,000. So for the differential amount, you will of course have to furnish a security. Just in case in future, we provide you final assessment order and you are not paying the differential amount, we can at least use your security, invoke your security to do recovery from you. Upon final assessment or reassessment, of course, you will have to pay the duty and that duty will be adjusted. If you have paid short duties, you will pay the differential amount along with interest. And if you have paid excess duty, you will get refund along with interest. Now, this is important. This is important. This was also asked in May 2022. I distinctly remember because my attempt was May 2022 and they had asked interest calculation on assessment. And like every 4 or 5 attempt, once a question of assessment of duty comes. So of course, it might come in your examination. Now understand, let's say I provisionally paid 1 lakh. And upon final assessment, officer gave an order of, let's say, 3,20,000. So I understand that I had short paid duties. I had short paid duties for 2,20,000. 2,20,000 so I have to pay anyways. Plus I will also have to pay interest. How to calculate this interest? Interest in GST is everywhere 18%. On all short payments, interest is always at 15%. But next question, 15% from which date to which date? This is the important thing here. They are saying that in whatever month you got your provisional assessment done, right from starting of the first day of that month, we will start levying interest till the date you finally make payment. Once again, ma'am, once again. See, listen. Let's say on 26 Jan 2024, I got my goods provisionally assessed. My final assessment order came on 30 March 2024. This was final assessment order. And finally, I took 2 days and I made payment, let's say on 1st April 2024. I made payment. So the interest at the rate of 18% will be applicable from 1st January, not from 26th Jan. They are saying you have to take first day of January month, which simply means all 31 days of Jan, 28 days of February, 31 days of March and 1 day of April. For all these days, I will have to pay interest. So this is something unique which you have not seen anywhere, and if you have not studied, obviously this thing can never click in your mind that starting from the first day of the month in which provisional assessment was done, your interest will start and it will continue till the date you are making payment for it. I will make you solve a question for this also. And just in case you have paid excess duty, now in that case they are saying, let's say I paid 1 lakh. But my final assessment order is saying I was required to pay only 80,000, which means I will get a refund of 20. This 20 though you will get refund. What about interest? Interest, they are saying that the day on which final assessment order comes, if within 3 months this 20,000 is paid to you, you will not get any interest. You will not receive any interest if within 3 months from final assessment refund is given to you. For the period beyond 3 months, let's say I got refund in 4 months, then for 1 month I will receive 6% interest. It is only for the period beyond 3 months that you will get interest at the rate of 6%. Tell me, is this clear to all of us? Because this is important. Also, one more thing, see for leap year. Now this thing, we are in 2024, which means February has 29 days. Now there is this ambiguity. ICAI sometimes considers leap year, sometimes does not consider leap year. And in suggested answers also you will find that if at all there is a date of 2020 or 2024, some places they take 28 days. Some places they take 29 days. What I advise you to do in examination, to take alternative assumption and write a note that you solve answer using 29 days or 28 days, whatever you think of February, and you also give an alternative note that see, normally February has 28 days, but since this is a case of 2020, which is a leap year, 29 days should be taken, and this is how we are calculating the interest, because we don't know what ICAI will do. Sometimes they consider leap year, sometimes they forget to consider leap year. You cannot take that risk. So in exam, if you find any date, normally they avoid only. Normally they will take dates from 2023 April to December or January, so that this issue doesn't come only. Just in case you find that February month is involved, please take alternative assumption, write a note and mention it very much clearly that we know it is a leap year and there should be 29 days, and if you take 28, this is the answer. If you take 29, this is the answer. Right? Chal. Let us solve one question. Come to question bank. Come to question bank. Page 472. Just a second. Chalo. Come to this question number 3. Question number 3 for assessment. Okay. So Morris Lal has imported goods from Germany and it is finally reassessed under section 18(2) of Customs Act, and there are 2 consignments. Okay. So the date of provisional assessment was 12 December and final assessment was done on 2nd February. For 2 consignments, we have consignment number 1, we have consignment number 2. Consignment number 1, there was short payment. There was additional duty demanded of 1,80,000. There was short payment of 1,80,000, whereas for second consignment, there was refund of 4,20,000. So here, and they are saying that finally the refund was made by department on 28 April and the duty demanded we paid on 5th February. Just give me 1 second. Solve this. Let me know the answer and give me 1 second. Okay, so see, for short payment, I know that on 1,80,000, I will be required to pay 15% taxes, 15% interest for how many days? So provisional assessment was done on 12 December, which means I will start levying interest from 1st December only. So 31 days of December, then 31 days of January, and ultimately I have paid the duty. I have paid the duty on 5th February. So 5 days of February. So 31 plus 31, 62 plus 5, 67. So for 67 days, I will be required to pay interest at the rate of 15%. So 1,80,000 into 15% into 67 upon 365, 4,956. I will have to pay as interest for the first consignment. Now, if we talk about second consignment, the final assessment order. The final assessment order came on 2nd February and the refund was granted to me. The refund was granted to me on 28 April. Is this within 3 months? Tell me. 3 months from 2nd Feb would be 2nd March, 2nd April and 2nd May. So it means that before 2nd May only I have got refund. The refund is within 3 months from the final assessment order. Therefore, I will not get any interest here. Had it been beyond 3 months, then whatever would be the period of delay beyond 3 months, for that period only, I would be getting interest at the rate of 6%. Right? Say yes or no, everyone. Understood. If it is 2024, you take 29 days and 366 days. What is the problem here? Chal. Done. This is a case of 2021. So we are taking 28 days and 365 days. Now one more question we will solve. Just give me a second. Come to question number 40. Come to question number 40. Let us solve one more question for assessment. Chal. Again, Joginder and company imported goods valued at 12 lakh. Void a bill of entry presented before the proper officer on 15 December 2021, on which date the rate of customs duty was 20%. The proper officer decided that the goods should be subject to chemical test and therefore the same was provisionally assessed at value of 12 lakh and Joginder paid 2 lakh 40 provisionally. Okay, so 2 lakh 40,000 we have paid provisionally on 15 December 2021 after fulfilling all the conditions. What are the conditions that are required to be fulfilled? That is okay. Determine the amount of interest payable if the final assessment is done on 31st January and we have paid the differential duty on the same day. So on 31st Jan 2022, the final assessment order was for 3,80,000, which simply means there was a short payment and short payment was of 3,80,000 minus 2,40,000. 380 minus 240, which means for 1,40,000. I have short paid. So what will be the interest amount on 1,40,000? I know I have to take 15% for how many days? Provisional assessment was done in December. So entire 31 days of December and I paid the amount on 31st Jan. So 31 days of January. So for 62 days, I will have to pay the interest. Say yes or no, everyone. Clear and understood. Chalo. Done everyone. Let's move forward. Now this theory again not very much important. It's all time limits that you can understand. That customs finalization, let's say some necessary documents are not produced, then officer can ask you and you have to furnish them. Any specific details, see these are general documents that they ask, within 1 month you have to provide. Any specific detail information officer is asking from you within 15 days. So the day on which officer asks you for the information, you have to provide within 15 days. Now this can be further extended by 3 months by proper officer plus 3 months by additional commissioner, joint commissioner or plus commissioner of customs for whatever period he thinks fit. Now understand what is the time limit to finalize everything. So a proper officer asked some information from you, and that was the reason to do provisional assessment, that some information, some document was missing. You provided that information document and gave the intimation that this is the document that we've provided. Or let's say provisional assessment was done for some chemical test, that chemical test is also done. Or some inquiry or investigation was pending and everything is done. Within 2 months from here or plus 3 month extension that proper officer can give. So the day on which all of these things are done, within 2 months plus 3 months from here, officer will have to finalize your provisional assessment. However, if CBIC, the board has issued directions to keep provisional assessment pending, nobody can go above board. If board says keep pending, we will have to keep pending. So whatever documents, let's say the officer asked you for 4 documents. You provided 3 documents and plus 1 document later on. From which date should I start calculating this 2 months? They are saying that if you are providing documents intermittently, this period of 2 months will start from the date of last intimation. That if officer is asking you for some information, some documents and you are providing it in parts intermittently, when the day on which you provide this last intimation, from there we will start calculating 2 months plus 3 months period to give officer to do the final assessment. Where documents information is not available, let's say provisional assessment is done, officer is asking some documents from you and the normal time limit is 15 days within which you have to provide the documents. 15 days are gone. You are not even seeking extension. You are not seeking extension and your time limit is over. Then what officer will do? The day on which your 15 days expire, or let's say you asked for extension, so 15 days plus your extension expired, you have yet documents, the officer will not wait any further. The day on which this 15 days expire, this 2 month plus 3 month time will start from there only. Now based on whatever information or document officer has, he will best assess your final assessment. So what they are saying is that if document information are not made only and you are not even seeking for extension of time, what officer will do? Officer shall proceed to finalize within 2 months from the expiry of this time limit that is given to you to provide the documents or information. Say yes or no, everyone. Here we complete the entire assessment under customs. So we started with import procedure, from where to to take permission, how to unload the goods, everything. We also studied about arrival manifest, import manifest, then bill of entry, and then assessment. Now we come to next topic, which is customs audit. Again, not very much important. See, understand, under customs, audit is not just done of importer or exporter. If the proper officer thinks fit, he can do audit of any person who is involved in the entire transaction chain, which means audit can be done of importer, exporter, even of custodian, licensee of warehouse, or any person, very important, any person who is anyways directly or indirectly connected with clearing, stocking, carrying, selling, purchasing of imported, exported, or dutiable goods. So auditee cannot just be only importer, exporter. Any person who is connected with the entire import or export procedure can become auditee under the customs audit. Salient features, very much simple. For the purpose of audit, you have to preserve your accounts documents for a period of 5 years. Now, how to decide that who will be auditee or whose accounts will be audited? It is all based on risk assessment mostly. The officer will have to, this is audit, this is not a raid, this is not inspection or search. So before starting audit, before coming, officer will obviously inform you so that you can keep your accounts records ready. So at least 15 days prior intimation is given to you that okay, we will start your audit after 15 days. So these are some basic features of audit that we anyways know, and these are also common with GST also. What are the two types of audit under customs? One is transaction based audit and one is premises based audit. See, in simple 2 lines, if I have to explain you, transaction based audit is limited to a particular transaction, that a consignment of 100 goods was imported. I want to see all documents, all the information with respect to this particular consignment of 100 goods only. That is known as transaction based audit, that for one particular transaction only I am conducting audit. Whereas premises based audit will simply say that, let's say for a period of 6 months or for a period of 1 year, all the consignments that you have imported, I want document for all of them. So premises based premises based audit is for a period, that within that period whatever has happened, we will audit everything. Whereas transaction based audit is limited to a particular transaction only. Now it might happen that officer has started with transaction based audit just to check only 1 or 2 particular consignments, but while checking these we found out so many errors that we feel no, we should check more, we should check everything for last 6 months. So the transaction based audit at any time can be converted into premises based audit. Say yes or no, everyone. Clearly understood the difference between transaction based audit and premises based audit. Now finally, clearance of goods, everything is done. Now everything is done. You have entered your goods for home consumption. They are not prohibited. You have paid all the import duties. If any dock charges, any other charges are required to be paid, you've paid everything. Officer will obviously now give you an order that go clear your goods. You will take this order, go to the custodian, show it to the custodian, and custodian will let you clear your goods. So on making clearance, bill of entry is presented to the custodian, who will then deliver the goods to me and I can take goods at my home. What is the time limit to pay the import duty? So generally, self-assessment, why to wait, for whom to wait? The day on which you are presenting your bill of entry, that day only you will do your self-assessment. In case of reassessment, when officer is now giving you some another order, you self-assessed was not correct, I am giving you reassessment or final assessment order, then within 1 day, excluding holiday means within 1 working day. If Sunday or some public holiday is there, you get 1 additional day. So 1 day excluding holiday from the date on which this new order or this new bill of entry is returned to you. Within 1 day for reassessment, you are required to pay the duties. For any delay that you do, you will have to pay interest at the rate of 15% for the period of delay. Now talking about deferred payment, where there is this small change also. If you are having version 3 of the notes, then also I have missed on this change and I have informed this in the Telegram channel also. So make sure you make 9 deferred payment of duty. See, only this portion is there in the notes. However, there is this very small amendment which is anyways not important, but still you should know because it is an amendment. So they are saying that for some big people who are regular importer exporters, what government do? Government allows them deferred filing bill of entry, deferred payment of taxes. So normally for all normal people, the day on which you file bill of entry, you have to pay the duties accordingly together at that time only. But for some major importers, government is saying that whatever I import from 1st to 15th of any month. I can pay duties together for all of this on 16th of that month. So let's say whatever I import from 1st to 15th December, on 16th December together I can pay duties for all of these bill of entries. And for 16 to the last day of the month. Now January it is 31, Feb it is, for some months it is 30. So we are not saying the last date. We will simply say 16 till last. You will pay on 1st of the next month. So for 16 to 31st December, whatever I am doing, I will pay the duties on 1st January. This is what is allowed for some people who can take permission, who are major importers under customs. Only and only for the month of March, because it is March ending, we don't want to take it till 1st April. So normally for all the months, 16 till last date you pay on 1st of the next month. But only and only for March you have to finish off everything on 31st March only. So for all bill of entries from 16 till 31st March, you have to pay on 31st March only. This is something that we have already studied. What is the amendment here? Amendment is simply saying government, if considers necessary in some cases, can allow a different due date also. That is what they are saying. See, it is only 1st to 15. For 1st to 15, 16 is the due date. For 16 till last date, 1st of next month is the due date. But if government thinks it is necessary, government can allow you a different date. That is all. This is the amendment. And also they are saying, let's see, if in a consecutive period of 3 months, you default more than once, means you should ideally pay all your duties for 1st to 15 till on 16, but you are defaulting on it. So if there is a default in payment of duty more than once in a consecutive period of 3 months, then they will revoke your this facility. Now actually, till you really pay your duties on the due date, or you pay your differential duty within 1 day, you clear all your dues and you actually pay all of these duties, we will not restore your facility to pay deferred taxes. So they are saying that the benefit of deferred taxes will not be available. If there is a default in payment of duty by due date more than once in 3 consecutive months, this facility will not be allowed unless you pay all the duties and interest in full. And the same has been amended to provide that eligible importer shall be permitted to do deferred payment only once he pays all of his duties within due date and any of the differential duty within 1 day from the date of understand. This is amendment, but of course this is not very much important from exam point of view. This is the normal due date. Government can allow a different due date also, and if you are defaulting more than once in 3 consecutive months, facility will be restored to you only once you pay all your duties and interest in full within the due date. Say yes or no, everyone. Clear with this point? You can just mark this. No need to refer anything. You can just write that different due date can also be allowed by government and your facility will be restored once I pay everything. That is all. That is about the change that you're required to do here. Right. Then mandatory electronic payment of duty means you cannot physically walk into the bank, you cannot physically go to the customs authority, give cash to them. No, you will have to electronically only pay the amounts. If you are importers who are registered as authorized economic importer and authorized economic operator and you are paying duty greater than equal to 10,000 per bill of entry. See, this 10,000 limit is same. Do you remember under GST also we had seen that you cannot manually pay challan over the counter if it is greater than 10,000 for any particular month return. Do you remember? Do you remember this same thing under GST, and same limit of 10,000 is there under GST, and same limit of 10,000 is also there under customs, that if your amount is 10,000 or more for any particular bill of entry and you are an authorized economic operator, we will not allow you to pay cash challans. You will always have to dedicatedly use the payment gateway of IceGate and make electronic payments. Again, faceless assessment, not very important. We understand that the port where you're importing the goods can be different from the officer who is actually assessing your goods. So faceless assessment, we all understand. Why faceless assessment? So that procedures can be streamlined, there is no corruption, things are faster, speedier, and same procedures are followed uniformly across India. Done. Payment through electronic cash ledger. Now this is all not important. See, the important portion of the chapter is done. So this is all just read once kind of things, that any duty that you are required to pay. Of course, just like we have cash ledger and credit ledger in GST, we also have cash ledger and credit ledger under customs. So for payment of any duty, interest, penalty, fees or anything, you will have to deposit using electronic cash ledger only. Specified people are exempted. See, if you are at a customs station where there is no customs automated system only, means it is not possible for you to use your cash ledger, then it is okay, you do not use your cash ledger. Or let's say baggage. See, understand, of course, a person who is having import export code will only have cash ledger. Now if today I am bringing goods in my baggage, we understand that with baggage also we are required to pay 35 plus 10, basically 38.5% of baggage duties. Now just to pay this baggage duty once, I will not take import export code, I will not get my electronic cash ledger and then pay duties. I will straight away pay duties to government. So in case of baggage or the places where there is no customs automated system only, or there is some other amount other than this, see, all this, so you have to pay using cash ledger only. Any of your, including cess, surcharge or IGST, GST compensation cess, any interest penalty that you have to pay, everything you will pay using your cash ledger only. If let's say some other kind of payment is arising, there could be some dock charges, there could be some other kind of charges, some other kind of payment that is arising, that is still acceptable and okay if you're not paying using your cash ledger. So these people are exempted. These people are exempted from using their cash ledger. Otherwise than that, all other people have to pay the amounts using their electronic ledger only. Earlier, these international courier terminals were also exempted, but now the international courier terminals will also have to use cash ledger only. So that point is also removed from here. Right. And just like you have cash ledger, you also have credit ledger. So you get any duty benefits, you get any duty scripts or anything like that, you get the credit of all in the credit ledger, and you can use your credit ledger to pay your duties later on. Now, let's say your goods have come to India, your goods have come to the customs port, and it is already 30 days or any further time that officer has allowed, or you have relinquished the title of your goods, means it is just 5 days your goods have come on customs port, but within 5 days you are saying, no, I don't want these goods, I am relinquishing my title. Now in such cases, what officer can do? Of course, officer can sell your goods in the auction. He will first give you a prior notice that we are selling your goods in auction, and then officer will take approval of department, give prior notice to importer, and ultimately sell the goods in the auction. If your goods are sensitive, hazardous or anything like that, which will ultimately spoil only in 30 days, that no one will purchase in auction also, so the officer can, in such cases, allow less time also. Done. And this is all again very much simple, that whoever is the winner of the auction ultimately will give the goods to the winner, and that person will now pay the duties, and the custodian will collect all the duties and finish off all the liabilities. Very much simple. What you just have to remember is 30 days period, that if you are not clearing your goods within 30 days or any further time allowed by officer, or you are relinquishing your title, then the department has full rights to auction your goods, to sell your goods and recover the dues. Right. Then this warehousing, without warehousing, I've already explained it to you. For what maximum period you can keep your goods in warehouse without warehousing provisions being applicable to you, it is 30 days. 30 days or plus a one-time extension of 30 days. 30 days plus a one-time further extension of 30 days, where you can put your goods into warehouse without warehousing provisions being applicable on you. Export procedure is just opposite of import procedure and also not important for examination. See, just like you have bill of entry in import procedure, we have bill of export in export. Just like we have entry inward in import procedure, we have entry outward in export procedure. Also for import as well, so you have to provide that passenger crew information and the export manifest, everything same to same. So the import manifest we studied, here we have export manifest. You cannot here also load your goods, there you cannot unload without permission, here you cannot load your goods without permission. No conveyance will leave India until and unless officer has given a written order that okay, everything is okay, duties are paid and the vessel can leave. You cannot let your vessel leave. These are the mandatory documents that you have to provide along with export. So this is again not at all relevant or very much important. If you understand import procedure, you automatically understand export procedure, which is very much simple actually, because Export duties as such are not levied only in majority of the cases. Government is in fact giving incentives to us to export. So that is not under much of regulation compared to import procedure. Say yes or no, everyone. Clear and understood. Transit transshipment, just a one line thing, not applicable to baggage, post or store, because we have particular chapter and provisions applicable to baggage, post and store. So let's say your vessel is coming here into India and the goods are not unloaded in India or even loaded into another ship, and ultimately the goods are not cleared into India is what I would say, and they are going forward to some another country. Now in such cases, if the conveyance remains the same, so let's say this vessel came, I unloaded some goods into India, remaining goods remained in the vessel and country. It is known as transit. Whereas transshipment means the goods are going to some another country, but there is a change in conveyance. We call it as transshipment. Section 53 is for transit, 54 is for transshipment. In case of transit, goods remain on the same conveyance. In case of transshipment, the conveyance is changed. So of course we understand if the conveyance is same, then all the details about the conveyance and everything, all the records can continue. However, if the conveyance is changed, person in charge would have changed, conveyance has changed, details will change. So of course, now new records will have to be furnished with respect to the new conveyance. However, be it transit, be it transshipment, since you are not ultimately clearing the goods in India for home consumption, there is no need to pay the duty. So goods may be transmitted or transshipped without any payment of duty. These transit and transshipment provisions are applicable to port and airport. If you are coming via land route, this is not as it is applicable. For land route, there are some additional specified conditions that you have to fulfill. Do not worry, not applicable for you, not applicable for your examination also. Just remember this thing, that this transit transshipment, that without payment of duty, I can transit or transship my goods to some another place, not even country. Let's say two ports in India, one Mumbai port and one Vizag port. So the goods have come to Mumbai port. Some goods are unloaded here, and then this vessel goes to Vizag port. Then here also no duty will be levied at Mumbai port because goods are not unloaded or goods are not cleared at the Mumbai port. So this could be that your vessel is going to some another country, or also it could go to some another port in India also. Ultimately, where you clear, there only you have to pay the taxes. So be it transit, be it transshipment, without payment of duties, you can further transit or transship your goods. Say yes or no. Say yes or no. Clear to everyone. See, if a particular student is having particular doubt with respect to some particular provision, you can always ask me after the end of the session on Telegram, or maybe I will wait after the end of the session. If there's some general doubt, I can take it. Baki, I feel it is all clear to all of us. So we complete entire import and export procedure under GST. Everything is theory. Just one practical thing was there, which was assessment, and we have solved two questions for assessment also. Examination point of view also, we understand that yes, from assessment questions can be framed. Done, understood. Shall we take a break? Or is it okay, we can continue and finish off the entire levy and exemption? Whatever is fine with you all. If you feel it is becoming heavy and you need a break, I am fine with that. Okay, majority students are saying break. Let us take a 5 minutes break only, and then we complete entire levy exemption, then we will go for lunch break, okay? So just a 5 minutes break. It is 10:13, we resume at 10:20. Drink water, drink something, and 10 resume. Chalo, let's start, guys. Back, everyone. Shall we start? Yes, chalo. So now, after having understood importation, let us now go to re-importation. See, general rule simply says that re-importation is treated at par with fresh importation only. General rule simply says that re-importation is treated at par with fresh importation only. So today if you export some goods and then later on at some point of time you re-import those goods, they will be treated as fresh importation and will be liable to duty normally as any imports are liable. However, we have some concessional duty in some special cases. What are these special cases? See, understand. When you originally exported your goods and then you re-imported. We are talking about this case. We're talking about this case when I only exported the goods and I am re-importing these goods. Then what duty will be applicable on these goods is the question here. So normally we say you treat it as fresh import and levy only. However, in these cases, when I exported, I had claimed some benefit. Now, on exports, government is giving a lot of benefits. It could be duty drawback, it could be refund under GST. If you are paying with taxes, it could be refund of that tax. If you are paying without taxes, it could be the refund of the credit that you get. Or under some DFIA, EPCG scheme, whatever benefits you had got when you originally exported. Today, if you re-import these goods, what you have to simply pay back is the benefits that were given to you. So the amount of incentive that you had availed at the time of export, the same amount is what you have to return to government. In case of point number 4, which is particular for DFIA EPCG, the amount of IGST and compensation says leviable at the time of importation subject to specified conditions, means you also get the refund. You also have to pay the GST or everything that was exempted. Also, goods other than those falling under 1 exported for repairs abroad. Now here what they are saying, understand, see, these goods I exported and I re-imported as it is what we are saying, that whatever benefit, whatever incentive was given to you at the time of export, you simply just return this amount, means no need to pay any additional now, import duties could be normally 30%, 40%, 50%. No need to pay those import duty according to Customs Tariff Act. You only and only give the amount of incentive that was given to you at the time of exportation. Right. Now, here what we are saying is, let's say I exported some goods abroad for repair. My calculator got some issue. I exported my calculator to USA so that I can get it repaired. Now this calculator is coming back. Of course, it is not fair to levy import duty on the entire calculator assessable value. So here government is simply saying that whenever you repair goods for, you export your goods for repair to abroad, whatever is the fair cost of repair that you take, now cost would include cost of material also, plus any freight or insurance charges both ways. So the freight and insurance for sending the goods from India to USA and also for receiving back these goods from USA to India. On this total amount only, I will levy customs duty, means not on the entire value of calculator, only on the value of repair. Now it could be possible that my calculator is under warranty and actually the person there abroad did not charge anything for my repairs. Still, if he would have charged, what would have been the fair cost of repair, that so I will have to take. So fair cost of repair, even if it is not incurred, still you have to take, plus freight and insurance both ways, for sending and for receiving. On this amount only you will pay import duty, means it is a concession. Of course, obviously I am not paying duty on the entire value of goods. I am only paying duty on the cost of repair plus the freight and insurance. And there can be some other general cases where nil duties, where nil duty are also being asked from you. So in case of point number 1 and 2 here, where I had availed some benefit and I have to only pay back the benefit, or I am sending goods for repairs to abroad. Is there any time limit? Yes. The time limit is simply saying that the day on which you exported these goods, within 3 years you have to re-import. Within 3 years you have to re-import these exported goods. Let's say today I exported a mobile phone, and now after 5 years I am re-importing. Then this provision will not be applicable. I will treat it as fresh importation, and normally freshly all import duties will be applicable. But only if I am re-importing within 3 years plus an extended period of 2 years, and only particularly for this DFIA EPCG Advanced Authorization Scheme benefits, the time limit is only 1 year plus 1 year. If I am sending my goods for repairs today, then within 3 years or plus 2 years extension, these goods have to be repaired and also brought back to India. Then I can claim all these benefits. The same goods have to be re-imported. Means small repair done. Entire remanufacturing, reprocessing should not be done on those goods. There should be no change in ownership in case of repairs. If today I am sending the calculator for repair, the calculator belongs to me only. I have only sent it for repair and it will come back to me after repairs. So there should not be change in any ownership in case of re-importation after the repairs. Say yes or no. Say yes or no. You will always in all the cases, Virish, you will always in all the cases have to include the fair cost of repairs when you are sending and receiving back the goods after repairs, right? Non-applicability, let's say if the re-imported goods had been exported by 100% EOU or a trade-free zone, or the re-imported goods have been exported from a public-private warehouse, re-imported goods which fall under the 4th schedule, tobacco products, petroleum products, so on in these cases, no conditions or these provisions are only not applicable, they are dealt in their own ways. If you are sending your goods for exhibition purpose or consignment purpose, then in that case we are saying no requirement to file any LUT. See, understand today. Today, I am sending my goods to abroad for approval or return basis. I am sending my goods in some exhibition, let's say for approval or return basis, means today it is not a supply. Today it is not a supply. I am not charging any consideration. I am sending my goods just to show them. If they like the goods, they can keep. If they are not liking, they will of course send back to me. So I exported actually without any consideration just to show my goods for some exhibition. And these goods are coming back to India, then of course this will fall in this situation and nil import duties will be levied. Why? I am not actually importing. Here you cannot say I am importing these goods, I am re-importing these goods. No, I had sent just to show the goods for approval or return basis and they have not approved it and returned the goods to me. In such cases, I will not treat it like a normal import and I will not levy all import duties, and here nil duty will be levied. So this falls under the residuary entry. 6 months time is allowed. This is the same time limit as GST. In GST also, if you are sending goods on approval return basis, there is 6 months time only. Otherwise, after 6 months, we deemed assume as if the goods are supplied. Right. Now, exemption to re-import of goods or parts thereof for repair, reprocessing or reconditioning, etc. Now understand, the case that we just now studied was of re-importation. So I sent goods and I am re-importing goods. Now what we are saying here is, let's say there are some goods manufactured in India and I exported these goods. Now there was some issue there. I manufactured some goods and let's say I exported my goods to Russia. Now there was some issue with my goods, so the Russian company sent the goods to me for repairs. So here I am saying that these goods are coming re-imported within a period of 3 years for repair or reconditioning, and after repair I will re-export these goods within 6 months. Are you understanding? 3 transactions are involved here. First, I exported the goods. Second, because of some issue for repair or reconditioning purpose, these goods are re-imported here. And third, after repair, I am sending the goods back to the original person. Here they are saying the day on which you exported. If within 3 years from there, you are bringing into India for repair or reconditioning purpose, and the day on which you bring into India within 6 months, which is extendable till 1 year, which means 6 months plus 6 months, 6 months can go up to 1 year. I am sending the goods back after repair. In such situations, here when I am re-importing, there is no need to pay any duty. What they are saying here, no need to pay any duty, because my intention is never to import these goods. My intention is to bring these goods, repair, and again send the goods back. Are we understanding? Are we clear? Do you understand the difference between here and here? Here we exported and we are re-importing these goods. Now after re-import, these goods will stay in India only. These goods now belong to us only. Here we are saying I exported. Within a period of 3 years, I re-imported. From re-importation, within a period of 6 months, I am repairing or reconditioning. And if it is the case of reprocessing, refining, remaking, in such cases, you have to re-import here. Not 3 years, then 1 year condition become applicable. Every other thing is same. So today I manufacture, I export, I re-import within 1 year, and from re-importing, I do reprocessing, refining, remaking, any process other than repair or reconditioning. I again send back the goods within 6 months, extendable till 1 year. So they are saying that here, when you are importing, at that point of time, no import duty is payable. You simply have to execute a bond. What if in 6 months you are not re-exporting? What if in this period of 6 months you are not re-exporting? At least officer can use this bond and recover the duties from you. Tell me, is this clear to all of us? Now, it is very well possible that while repairing, reconditioning, remanufacturing or reprocessing, there was some normal loss, some scrap being generated. That is all okay. If there is any normal loss during operation, everything will be exempted from duty. We will not say that, let's say, the goods that we imported were of 100 grams. Now, while doing repair, there was some 2-3 grams normal loss, and finally when I am re-exporting, the weight is now 97 gram. And government will not come and ask me for duty for this 3 gram. It is understood, acceptable, that if I am doing repair, remanufacturing, there would be some normal loss during the operation, and the quantity might not be exactly same, it might be slightly low. It is still okay. We will not levy import duty at the time of importation in such situations. Very, very simple this is. If your goods are derelict, jetsam, flotsam or wreck, simply means you have abandoned your goods in the vessel, your vessel broke, and then these goods floating come to Indian ports. Duties will be levied as we normally levy duty on any imported goods. So let's say here on my vessel there were 1000 goods. I threw 50 goods out of the vessel, and these goods floatingly came into India. I cannot simply pick up these goods and say, yeah, I found these goods here, so I'm just taking these goods home. No, they are saying that all these goods, derelict, jetsam, flotsam or wreck, either you bring or they automatically come to India. We will deal them in the similar way as if you are deliberately importing these goods into India, which simply means all import duties will be applicable unless officer is satisfied that, okay, actually this was a case of a vessel breaking down and now this has reached India floating. So if the officer is satisfied that it should be admitted duty free, that is a separate case. Otherwise, goods, jetsam, flotsam, derelict, wreck, they will all be brought into India same to same, at par with any normal import traded goods. Right. Then IGCR rules, import of goods at concessional rate of duty or specified end use 2022. You will find the rules to be like ranging 3 to 4 pages, but again it is not very much important. Anyways, I have uploaded a revision of this already in the previous attempt also on YouTube. You can refer that also. There is no change, nothing. I'll just give you an overview and we'll move forward, because as I informed you in the beginning of session also, our target is to cover majority of the things nicely which are important. So what is this? I'll not skip, I'll give you an overview. Now there can be two cases. Case number one, where normally, let's say if I import plastic, the rate of custom duty applicable on plastic is 50%. However, government says that if any person is importing plastic to manufacture calculator, for them we will levy only 20%. Means government is allowing me to pay taxes at some concessional rate, right? This is case number one. Case number two, let's assume import of plastic is banned in India. Nobody can import plastic, but only if a person wants to manufacture calculator, government will allow you to import plastic, which means I am actually importing prohibited goods which are normally prohibited only, but still government is allowing that, okay, because it is for some specified use, we allow you to import. Two cases understood, right? One where because of some specified use, allowing me to pay less duties. Second, government is allowing me import, which import is normally prohibited. Now, how will government ensure that you are actually using these goods for the specified person only? Now, what if once we allow you import of plastic, you start using it for some another purpose and not for calculator? For this thing, this IGCR rules have been put into place, where before importing, to give a one-time prior information on the common portal, and they will give you an IGCR identification number. IIN number will, now every time you import plastic, you can give your IIN number and your continuity bond details. Now what is continuity bond details? See, normally duty is 50%. Government allowed you to pay 20%. So for this differential 30%, obviously bond has to be there. Now because you normally keep importing plastic, every time no need to furnish a bond. What bond would be kind of a ledger, where for one X amount you will furnish a bond. Now every time you import, this duty will be deducted from the bond, and once you specify, once you make a calculator, show it to government that see calculator is made, done, I have specified, I have completed my end use, this amount will be added back to the continuity bond, and now using this bond amount you can import more goods. So this would be kind of a ledger where you keep importing, your balance will reduce. Once you complete your work, your balance will again be increased. This will be for differential duty. But let's say plastic is banned only and still government is allowing me to import plastic. In such case, the entire value of plastic will be reduced from the bond. So we are simply saying that whatever bond you are furnishing, for cases where concessional duties are allowed to you, the bond amount has to be of the differential duty amount. Differential duty amount. But in other cases where the goods are prohibited only, the bond amount has to be equal to assessable value. Say yes or no, you understood what I am trying to say here. Right. So the bond is debited automatically. Here they are saying that when you furnish your bond details and your IIN number, your bond will be debited automatically, and then later on whenever all of your conditions, obligations are fulfilled, the bond amount will be recredited. Of course, you have to maintain accounts records with respect to everything, that this is the quantity of plastic that I imported, this quantity I have sent to job work, this quantity is generated as a scrap, this quantity I have used as this. So everything, the date of receiving the goods, the date of sending the goods to job worker, quantity wise details, everything you have to maintain and furnish in a monthly statement. Otherwise, how will government get to know whether you are actually using the goods for specified use or not? So on a monthly basis, 10th of the following month, you will have to keep furnishing records and documents to the government. You can obviously send your goods to job worker, and the time limit would be that maximum within a period of 6 months, job worker will have to send the goods back to you. See, in GST, we have this provision where job worker can send the goods directly to customer also. Here it is not applicable. In IGCR rules, job worker has to mandatorily return the goods to the original importer, that too within a period of 6 months from the date of invoice or bill of or e-way bill that is being generated while sending the goods to job worker. Job worker will also maintain all the accounts records and everything, and if officer is asking the records from job worker will also have to provide these accounts. Now it is also possible I am transferring these goods to some of my branch or another unit. Again, same to same, all details, accounts will have to be maintained and will be required to be furnished in this monthly statement, that what quantity is sent to job worker, what quantity is sent to some my another unit or branch. Right. It is also possible that I am not a manufacturer of calculator. I know Mr. A who manufactures calculator. I am Mr. B. I know how to import plastic. This person knows how to manufacture calculator. He doesn't know how to actually normally do all the import procedures and import plastic. What we can do is, I as a trader can import plastic for Mr. A and send the plastic to Mr. A, who will now manufacture calculator out of it. So this is also allowed, that I myself, I am not fulfilling the conditions, I am just a trader, but I know a person, an end recipient, who will fulfill all the conditions. So I can import the goods for him, and at that time also I can get benefit of concessional duty. But again, I as well as this person, both of us will have to maintain all the proper accounts and records so that government is satisfied that yes, plastic is used for the specified purpose only. Done. If at all there is some unutilized or defective goods, either you export them back, or if you are not using it for specified purpose, then please pay duties on the same. For capital goods also, let's say I imported machine. and I use this machine for some particular period just to manufacture calculator. Now my purpose is done, is over, but the useful life of machine is still pending. Then what to do? No problem. Then on a reduced amount, you can pay duties and clear the capital goods for your home consumption. So we are simply saying that the importer may clear the imported capital goods after using it for specified purpose, and then you can simply pay on reduced amounts. You can simply pay the duties and clear your capital for home consumption. In any case, if you took the benefit of concessional duty, you took the benefit of importing the goods which are prohibited, and later on within a prescribed period, if nothing prescribed, 6 months, if there is a prescribed period, you take that. If nothing is prescribed, by default period is 6 months, that within 6 months you use those goods for the specified purpose. If no, then in case of a exemption, whatever differential duty was there, along with interest, it will be collected from you. In other cases, entire assessable value will be collected from you. I said no, but I actually covered entire IGCR rules also. Tell me, is this clear to all of us? Say yes or no. Say yes or no. Done? Understood. Sure. Determination of rate of duty and rate of exchange. This same to same table is also there in the chapter of valuation under customs. So we will cover it there only, because while solving the questions of valuation, you will require this table. And this table is extremely important. So we will cover it twice, no problem, because the table is very important. If at all on the day of examination you feel that I don't remember this table, no problem, tear this page, take it along with you, but this table will be required to you in the examination. So simply, let's say today, when the goods left the country, of export, the rate of customs duty applicable was 50%. Today, when the goods are coming into India, the rate of duty is 40%. Now I am confused. What rate of duty should I take? 50 or 40? So we are simply first understanding that the duty prevailing on which date should be taken for the purpose of assessment. Now, I believe since exams are so much near and we are in a marathon, you obviously remember this table. So quickly, without seeing into book, answer me. If I am clearing my goods directly for home consumption, the rate applicable on which date should be taken for my assessment purpose? If my goods are coming via vessel, then later of bill of entry or entry inward. Since there is no provision of entry inward, we just now saw, and I shouted it 10 times, that entry inward is applicable only for vessel, So there will be no entry inward for aircraft or vehicle. There will be simply arrival date, the date on which the aircraft is arriving. So the bill of entry or entry inwards or arrival date, whichever is later, on this date, whatever is the rate of duty prevailing according to Customs Tariff Act, I will take that rate of duty to do my assessment under customs. When I talk about goods cleared for home consumption, we simply know whenever goods cleared after warehousing for home consumption. So I know when I deposit my goods into warehouse, into bond bill of entry is filed. When I clear my goods from warehouse, X bond bill of entry is filed. Tell me, on what date I actually pay the duty? I have to pay the duty when I file X bond bill of entry. So of course, the rate of duty applicable on X bond bill of entry will only be taken for the purpose of consideration while doing assessment. In case of export, it is let export order, and now any other residuary case, of course, the date on which whenever you are paying the duty, you simply take the rate of that date only, right? Now, since this is import and export, so of course, forex currencies will be involved. Whereas import export duties that I pay, I have to pay in INR, rupee. So simply, I will have to convert everything into INR for the purpose of assessment. Question might give you RBI rate, SBI rate, interbank rate, etc., etc. What you have to focus on is the CBIC rate of exchange. The rate of exchange is notified by Central Board of Indirect Taxes and Customs. You simply always have to take the CBIC rate of exchange only. So here we are saying that in case where you are directly clearing your goods for home consumption, whatever is the rate of exchange applicable on bill of entry date, you will simply use that rate of exchange to convert your foreign currencies into INR. In case of warehousing goods, X bond bill of entry we have taken for rate, then for the rate of duty, then for rate of exchange, you simply take into bond bill of entry. Export, it is shipping bill, and any other case, it is date of payment of duty. You have to remember this table. There is no alternative available with you. Point number 1 and 2 extremely important. Point number 3 and 4, okay, because export questions are not normally asked in examination. So for rate of duty, I will take later of your entry inwards. Whereas for rate of exchange, I will simply take bill of entry. In case of warehouse, because I pay the duty while filing X1 bill of entry, so rate of duty will be X1, then automatically rate of exchange, what remains is into bond bill of entry. Yes, and clear to everyone. Done, ma'am. Now let us discuss about remission, abatement and exemption. First of all, let us understand the difference between all of these three terms. Remit. Remit means once I have paid, I am getting its remission back. Abatement is kind of a I don't have to pay duty only. One by one we will see. See, exemption today, if I under GST, if something is exempt, I'm not paying only. Remission, I paid once, I'm getting back, kind of refund. And abatement, I was originally required to pay 100, but I pay only 70. I got some discount. That is known as I got an abatement for 30. So are we understanding remission, abatement and exemption under customs? So first of all, section 13 simply says that if my goods are pilfered. Now pilfer simply means petty theft. Choti choti chori that we say. Petty theft is basically pilferage. So once my goods are unloaded, after the goods are unloaded, but before proper officer makes an order for clearance, after unloading and before clearance, if my goods are pilfered, with my goods are pilfered before clearance, we are not considering that here. We are considering that here. See, if something is cleared before, something is pilfered before clearance, before unloading, which means while the goods were in sea, let's say they were stolen. Now those goods have not come into India. Something that has not come into India only, the question of assessment is only. If something comes to India, then we think of assessment. No. So before reaching goods India, if they are pilfered, then so they are out of question only anyways. Understanding my point? Yes. So if goods are pilfered after they are unloaded, but before an order is made for clearance, the importer will not be liable to pay any duty. If the goods are restored to importer, then of course, if the goods are restored to you, you will again become liable to pay the duty. Pilferage simply means petty theft, which means entire loss of packages are not included here. See, rather than understanding one by one, we can understand section 13 and 23. In difference between, it will be simple for us. Section 13 simply says the duty is exempt only. The goods are pilfered after unloading before clearance. Before clearance means clearance order is only not yet made and my goods are pilfered. So of course no need to pay duty. Duty will be exempt. Whereas section 23 says that when the order is passed but before clearance, order is passed, when I go to take my goods before clearance, I find out that my goods are missing, my goods are lost, destroyed, abandoned, written off completely. They are not there only. Now in such case, the duty will be remitted to me. Here there is no restoration possible. See, you will have to prove here that your goods are destroyed, that your goods are lost. You will have to prove this thing. Once you prove that your goods are destroyed or lost, which means the possibility of restoration doesn't even exist. Where in case of pilferage, you don't have to prove anything. It will be very much apparent. See, petty theft, understand. Today, if this is a carton, this is a package. It had 10 goods in it. Now 2 are missing. Petty theft. I can simply see the missing spaces. I can simply see the missing blanks. See, there is evidence that my packages are tempered. There is some blank space for missing articles. Unit articles are missing, not entire, it's like not part articles. If I talk about calculator, my entire calculator is pilferage, not that someone has opened my calculator and took out a battery out of it. So we are saying missing articles has to be unit articles, not just part. Now in such cases, it is very much evident. I can see only that these articles are missing. Then there is no requirement to prove pilferage. Pilferage will be very much apparent. And obviously there is a chance of restoration also. If the goods are restored later on, duties will be paid. However, in case of section 23, there is complete loss or destruction. There is complete loss or destruction, which simply means restoration is not possible only. So goods may be lost, destroyed any time before clearance, but here it is very much restricted. After unloading, before clearance. After unloading, before clearance. And section 13, pilferage point is not applicable on warehouse goods, whereas The damage loss point is also applicable on warehoused goods. Right. If I talk about abatement, reduction of duty, now this was actually not very much important. This is more important. As such, everything is important. This pilferage, abatement, remission, everything is kind of important for exam point of view. I cannot call it as A category, but yes, B category definitely it is. These things become slightly more relevant. Section 22, abatement, reduction of duty in case of damage or deteriorated goods. First of all, let us understand the difference between damage and the difference between deterioration. See today, if I import mobile phone, and I mistakenly dropped it, the screen is broken, or let's say there's some part damaged, we call it as damage. It is a physical damage. I cannot see the screen. My mobile is no longer even fit for the intended use. It is known as damage. Whereas here, let's say I imported mangoes. Now, of course, we know as time will pass by, mangoes will get ripe, and of course, finally, they will get finally सड़ जाएंगे now. I don't know सड़ जाएंगे को क्या बोलते हैं. So finally, they will not be of any use. They will overripe. So here we say reduction in quality of goods due to natural causes. Now, deterioration is something which is not in our control, and we know it is going to happen. Eventually, everything has an expiry date. So I know for deterioration, the quality will reduce due to natural causes, whereas damage is some kind of a physical damage that has happened. So here we are saying that if your goods are damaged before or during unloading, even by accident after unloading, examination is yet to be done by customs authority, or by accident when your goods are in warehouse, if damage is done at any point of time, we will give you benefit of abatement because duties are yet to be paid by you. I imported a mobile phone which is worth 70,000. Now, while the goods were being unloaded, the screen broke. Or let's say goods are unloaded, but officer has not yet done my examination, means we are yet to pass the assessment order. Or my goods are in warehouse and they are damaged. In such situations, now after damage, the value of this mobile phone is now 40,000 only. What I will do, I will simply take proportionate amount. That when the value was 70,000, let's assume duty payable was 15,000. So today, if the value has come down to 40,000, what duty will be payable now? This is how you calculate abatement, and you pay the duties in case of damage. In case of deterioration, understand that it is natural. Don't you know that if you will import mangoes and not clear it for some point of time, your mangoes will ultimately got rotten. Yes, yaad aa gaya. Rotten. Yes. Sadna, we call it rotten. Chalo. So here we say reduction in quality of goods due to natural causes. So here we say abatement is available only if the goods are deteriorated before or during unloading, bus done. After unloading, so we all know that the goods will get deteriorated because everything has an expiry date. Why will customs department lessen or give abatement to you with regards to your import duties, where we all know that due to natural causes deterioration takes place? So here we are saying that for deterioration you get benefit only before and during unloading, whereas damage you get abatement before, during unloading, even after unloading, before officer has done assessment, and even if your goods are lying in warehouse. Accident should not be due to willful act. Yes, just to save the duties, you are deliberately not, that we need to make sure. So whatever was the duty before damage, see, this is simply cross multiplication. My goods originally were 70,000. At that point of time, 15,000 was payable. Now the value has come down to 40,000. What should I pay now? So this is simply cross multiplication. See, duty before damage was 15,000. Multiply by value before damage. Multiply by value after damage, which is 40,000, divided by value before deterioration, that is 70,000, and this is what you do in cross multiplication, and this is how you also form the formula. Say yes or no. Done, understood? Abatement in case of damage and abatement in case of deterioration, and also difference between section 13 in case of pilferage and section 23 where your goods are completely lost. Case of relinquishment, importer has the right to relinquish. See, understand today, if you have seen Badmash Company movie, Badmash Company, where you imported some goods and you feel that these goods are not according to your specification, not fit for you, you don't want to clear the goods, you can relinquish the title. You can say that I don't want these goods. You leave the goods, department will leave the duty. So you leave the goods that I don't want these goods, department will say, okay, we don't want the duty. Then department will auction it to someone else and then recover the duties from there. Right, ma'am. However, let's say I imported a gun. I imported Katta, AK-47. Now in this case, owner will not be allowed to relinquish just because I imported some goods which were offensive. Now I am caught, I will say, hey, I don't want these goods. These goods don't belong to me. So you cannot relinquish the title if your goods are offensive. General goods you have imported, you can relinquish the title, you leave the goods, department will leave the duty. Denaturing or mutilation. Now two things. One is denaturing and one is mutilation. Understand, let's say I am importing again some kind of a liquid. I am saying this is industrial alcohol. Now assuming, just an assumption, that if you, I have a sanitizer factory. I manufacture sanitizer. Now there is alcohol being used in manufacture of sanitizer. So industrial purpose alcohol, let us assume rate of import duty is 30%. But if I import alcohol for consumption purpose, let's say rate of duty is 70%. I am actually importing for consumption. While importing at customs station, I am saying that no, it is for sanitizer, it is industrial purpose. What officer can do? Officer can put some kind of a chemical into it that now it becomes unfit for drinking purpose. Officer will say that, see, you don't want to drink anyways, I am putting this chemical. So the alcohol is still useful for sanitizer purpose, which means I am making it fit to use only and only for one purpose, and accordingly we are levying duties. This is known as denaturing. Mutilation. Let's say I am importing some machine. I am saying that no, this is not machine, this is scrap. Because rate of machine applicable 70%, scrap applicable only, let's say 20%. I am saying this is just a piece of metal, a scrap for me. Officer will say, okay. Officer will simply take a stick, tuck, and they have simply mutilated. They have simply mutilated your machine, that anyways, if I mutilate, it will still remain a scrap for you. So officer can denature or mutilate your goods just so that they are fit only and only for one purpose, and then they can levy the duties accordingly. Right, ma'am. Chalo. Then exemptions from custom duty. There can be general exemptions, there can be special exemptions. This is all like very simple. If some goods are imported in public interest or official gazette, government can give in official gazette that generally if any person is importing these goods, we are giving general exemption. There could be some conditional exemption. Now this time limit. This time limit simply says that today government has given some kind of exemption. Now in notification, normally government gives the time that this exemption is applicable for this period. Let's say there is some conditional exemption issued by government and they have not mentioned any time limit for applicability of this notification. Then the by default applicability would be, assuming this was issued on 20 December 2021. You calculate 2 years from here, which would be 20 December 2023. And immediately after that, which is the 31st March 2024, this conditional exemption will be applicable till this date. What we are saying is, for any conditional exemption where the dates are not mentioned, it is valid up to 31st day of March immediately after 2 years. So the date of notification exemption, calculate 2 years from there, and after 2 years, whichever is the 31st March coming, till that period we say that this conditional exemption will be applicable. However, this is all other than specified cases. This is also an amendment for your attempt. This might come up in theory, chances are not high, but might come. Theory, because this can be asked for a 5-mark plain theory. That if it is a multilateral, bilateral trade agreement, then we go according to the trade agreement and not according to this exemption. So if there is foreign trade policy, privileges of constitutional authority, we in a World Trade Organization, let's say we are under some contract, treaty, conventions or anything like that. Or if it is a baggage or anything like that provision, then specific provisions apply. So for these cases, we are saying that this time limit is not applicable. However, in other than specified cases, this time limit of 31st March immediately after 2 years will become applicable for any of the conditional exemption. Government can also issue special exemption in public interest by order, and if in any case the duty is less than or equal to 100 rupees, government is saying that go have fun. No duty payable if the amount of duties leviable is equal to or less than 100 rupees. effective date. If the effective date is not mentioned, the day on which it is issued in official gazette becomes your effective date. If special order, whatever is the date of issue, and let's say today, this same thing we have also covered in GST. Today some exemption notification is issued. Within 1 year, if there is any clarification being added, within 1 year, if there is any clarification being added with respect to this exemption notification, this clarification will also be retrospectively applicable from this date only. If after 1 year it is added, then whenever it is added from that date, it becomes applicable. See, this is nothing new. I believe and I wish and I hope you remember this from exemption under GST that I have already taught you. That today, if some exemption notification is issued and within 1 year if a clarification is inserted, the effective date of this clarification will be from here only. If after 1 year it is inserted, then the day on which you insert the clarification, it becomes effective from that date. Right, ma'am. Then section 25A, 25B, again not very important. Exemption from custom duty on imported goods used for inward processing of goods or re-imported goods used for outward processing. So you are importing goods for any of the inward processing or outward processing. Means you are manufacturing something that you are going to export, or you are manufacturing something according to some specified exemptions. In such case, let's say, for any repair purpose, 1 year time limit, identifiable goods, other specified condition. So whatever actual process for which you are importing the goods, within 1 year everything should be done. Within 1 year, this repair, further processing, manufacturing, whatever you are doing, inward processing, outward processing, whatever you are doing for the goods which are particularly identified for this purpose, it is a specific case or any other specific condition that you have to fulfill. You fulfill that condition within a time limit of 1 year, these identified goods will be repaired, manufactured according to whatever was particularly prescribed in the order. Say yes or no, everyone. Done. So here we complete import procedure, export procedure, transit, transshipment, levy off and exemption from customs duty. Now one more topic that we will cover before lunch break, which is important case laws under custom. If you are not remembering name of the case law, but it is non-negotiable for you to remember the content of the case laws. I have given you a list of 13 case laws here which are normally asked or which are present in some of the module or past RTP, MTP questions. So it is okay if you don't remember Garden Silk Mill's name, but it is not okay if you don't remember the content that is given in the Garden Silk Mill's case law. Now this we have already covered along with import procedure, that the goods, the importation will start. The importation commences as soon as the goods cross territorial waters of India, and it will continue till ultimately your goods reach the port and you are filing bill of entry for home consumption. About taxable event, already covered in the first half an hour of the session only. We covered the case law of Garden Silk Mills. Kiran Spinning Mills also we have done, that when I am importing goods and putting into warehouse, what will be my taxable event? Ex-bond bill of entry, that when I am ultimately clearing the goods from warehouse to form it a part of land mass by clearing it for home consumption, in one line, in one word, I can say whenever I am filing my ex-bond bill of entry, that is taxable event in case of warehouse goods, that is Kiran Spinning Mills. Then we have completed this Sun Industries and Rajendra Dyeing Mills also. Sun Industries simply says that my goods have crossed territorial waters of India, but due to some issue it returned back. Still I will say export has happened, because definition of export simply says whenever you are crossing territorial waters, I will say export has happened. Whereas Rajendra Dyeing Mill says the goods left the port of exportation, but my goods sank in territorial waters only, not able to cross territorial waters. I will not consider it as export. So these 4 case laws I have already taught you along with the relevant provisions. Then coming to Lloyd Chilies Offshore Limited, we are saying that here, see, this is Indian territory, this is territorial waters of India. Now we also know something about exclusive economic zone. Yes, there are these oil rigs and specified designated areas which we consider as India, which are exclusive economic zone. So if you import some things here also, then also we will say import duties will be applicable. This is the case law of Lloyd Chilies Offshore Limited, that goods imported on oil rigs situated in this exclusive economic zone is also a deemed part of India, and if you import something here, then also import duties will be applicable. Mangalore Refinery Petrochemical, very much simple. See the quantity. Today, if you are importing petrol, then the same quantity that left the port of exportation will not match with the quantity that you have actually received. You will pay duty on what you have actually received. The bill of lading at the port of exportation could specify some other quantity because their bill of lading would be according to what quantity left from their port. But some goods, some petrol might have evaporated during transit. So now whatever you actually receive, which will not match from bill of lading, it is still fine. Whatever you actually receive, you have to pay duty only on that amount. That is Bangalore Refinery and Petrochemicals. That duty is levied on actual quantity of crude oil received and not on the quantity that was shown in the bill of lading by my exporter. Bharat Surfactants Private Limited. Let's say today, this is territorial waters of India and here a vessel has to come. Now the vessel entered territorial waters of India. There was no place here to dock, means entry inwards was not given or something happened and the vessel went again. Back again. What should I take as my entry inwards date? What should I take as my arrival date? They are simply saying whenever there is the final entry of the ship. So the rate of duty and tariff valuation would be done on the date of final entry. If the ship comes, has to go back due to some condition, due to some situation, and then it again comes back. All assessment will be done thinking in mind about the final entry date and not the first entry that occurred and nothing happened post that. Importation is relevant and not the date of contract. Of course, we all know this. Rajendra knitting mills, whatever your rate applicable as on the date of actual import will be relevant to consider your duty assessment, and you could have entered into contract anytime. You could have done negotiation, that is all separate thing. The day on which actual import is taking place, what is the rate prevalent there will be applicable for your customs valuation. Associated Cement Companies Limited. Any drawings, designs, manuals, technical materials are also goods. You cannot consider them as service, because if I consider something as service, it automatically gets excluded from import duty, because we know charging says that import and export duties are applicable only and only on goods. So no import export duties are applicable on services, only applicable on goods. So they are simply saying that if at all there is any design, drawing, manuals or any technical materials, you consider them as goods and you levy import duty on them also. Today in GST or in customs also, you get a lot of benefits if you supply to SEZ unit. Like we treat zero rated supply. Today if I export something or I supply something to SEZ unit, I get export benefits, I get zero rated benefits. But if at all, let's say there are some particular goods that if I export, I have to pay export duty on these goods. There are some particular goods that if I export them today, they are actually liable to export duty. Now, if I supply these same goods from DTA to SEZ, should I pay export duty? Has export happened? Here government is saying no. Officer demanded export duty from Tirupati Udyog Limited, and ultimately Tirupati Udyog Limited won the case now, saying that my goods have never crossed territorial waters of India. Taxable event never occurred only. Why should I pay export duty? So supply from DTA to SEZ will not attract any export duty. Right. Hanel Era Textile Limited. What happened here was, there was this notification order saying that Hanel Era has imported something. Hanel Era had imported some kind of machinery, some kind of items using which it was supposed to generate electricity, captive electricity, that was supposed to be used to fulfill some of the conditions, some of the specified end use that I have imported. I have imported something, using that I am manufacturing electricity in-house, and using that electricity I will manufacture some goods which are required to be exported. For such specified purpose, government had allowed them to import these materials duty free or at less duties. What happened was, Hanera generated the electricity, used it for the specified purpose. Now there is some surplus electricity left. What I can do? I cannot store it. So Hanel Era simply supplied that surplus electricity in the domestic tariff area. Then department demanded duty for all of those items that were imported to generate electricity. So here what happened is, see, notification simply said that you use your electricity to manufacture the specified goods. That I have done. I have completed all of the conditions or specifications that were on me. Now, if I have generated spare electricity, any rational person would obviously not waste on it, capitalize and supply it in the domestic area. So we are simply saying there was no restrictive clause in notification. No violation is done. Surplus electricity, it was surplus. Whatever was required to be used for the specified purpose, I used. Now, if I have surplus electricity that is being generated, of course, no one can stop me from supplying in DTA, and ultimately Hanil Era won the case law and there were no requirement to pay duties by Hanil Era. BPL display devices. Now here we are saying that to manufacture television, let's say to manufacture television, you have imported some panels, etc. And government is providing you duty concession that by importing these panels, you will make a TV. And we are not levying import duties on these panels. Now what happened? BPL display imported some kind of a panels. Now some panels got damaged in transit. There was a leakage or a shortage or a crack. And it is not practically possible for us to use these panels to manufacture television. So should import duty be levied on these panels is the question. Here government is saying, see, we understand your intention. We understand your intention that benefit of notification will not be denied. You are using all the panels to manufacture television. Now, if it is not in your hands only to use the panel because of some shortage or leakage, in that case, it is okay. We will not levy import duties on these panels. So they are saying that benefit of notification cannot be denied in respect of goods which are intended for use of manufacture of final product but could not be used. Our intention is to use. Now, how can I use? If it is leak or short or broken, I cannot use it practically. Otherwise, I would have used. And last is Tulo India Operations Limited. What is Tulo India Operations Limited saying? Simply, I imported some goods which were duty free, subject to a condition that I have to get some kind of approval from a regulatory authority. So importing these goods is duty free with the condition that I need to get approval from this regulatory authority. I applied to that authority within the prescribed time, within the time limit. Now this government authority actually delayed giving me the approval or giving me the certificate. Can my duty free benefit be rejected? The answer is no. Importer's claim for exemption cannot be rejected owing to non-compliance that is not in his control. So government department did not issue me certificate. I applied for certificate on time. Rest is not in my hands only. Now it is in hands of government to provide me with this certification. So here we are saying that if something is not in importer's hand only, how can you deny him the benefit of exemption of duty? This is all about Tulo India operations. Tell me yes or no. You are clear with all the 13 case laws. I'm repeating again, it is okay. It is completely fine if you are not remembering the name of the case laws, but it is not okay if you don't know what is the content in the case law. Might come up in MCQ, might come up in some kind of question also. So done. Here we complete levy, exemption, import procedure, export procedure and plus transshipment. Done. 317 page from we started, we've already come at 343 page. The total pages are 390 only, and that last 5-6 pages are FTP, which anyways I've already uploaded the video. So halfway we are done. All the major things are done. Yes, valuation, baggage questions we will solve, but it will be fun and will not take much time. All the procedure and boring part is now over. Now whatever we'll do will be fun. So done. Are you all with me? Understanding everything? समझ आया, मजा आया, याद हुआ, you're understanding, you're enjoying, you're remembering with me. It is going heart, fire, bomb. Yes, ma'am. Now we'll take a break of half an hour. It is 11:15. We resume somewhere around by 11:45, and then one shot we will complete all of the remaining portion. I need approximately 4 hours more. So like around 4 or 4:30 we will wind up the session. I will give you one short break meanwhile also, but this 1/2 an hour break, go freshen up, have your lunch or whatever you want to do, and then till 4:30 don't ask for break again. I will give you a 5-10 minutes break for tea or coffee in between. Right? Chalo. So let us meet and resume back at 11:45.